Hi, this is Randy Finney with the right side of the chart, and today's Monday, October 19th. It's about 10 till 3 Eastern Time right now, and I wanted to do a quick video on the gold mining stocks. One of the benefits now having the forum is I can, share a lot more content, trade ideas, things that I'm thinking and doing during the day. Whereas before, on the front page of the site, I didn't want to have too much activity, especially on the smaller trades. Some people might not be interested, so in the forum you can just move on if you're not an active trader. But one of the reasons I wanted to do this video, I do have quite a few, over the years I've talked to quite a few traders. Some of those traders have more experience than I do by many years, and others, quite a few, are new to trading. So there's all different types in there, and what I wanted to do is really impress the importance of defining one's trading style. I will post what I see, what I'm doing. I don't post all my trades. I don't take every trade posted on the site. I take some that aren't posted on the site. But most importantly, I'm an active trader. At times, I will sit back, swing trade. I'll even, have accounts that are investment or trend trade mode, longer term accounts. And when the market's conducive, I'll be day trading sometimes days on end, or just occasionally. And that's what I wanted to talk on today about this reversal in GDX, and just kind of share my thoughts on who it's right for and who it's not right for. I mean, it's not my place to say what trade anybody should take. I cannot give advice, but I believe it's important that less experienced traders, if you're not sure what to do and you see that I'm posting a reversal on a trade, just Thursday I put this on as a short trade with considerable downside targets. We're only about halfway there on GDX. In fact, let's pull that up here. That was posted on the 60-minute chart of GDX. We were looking at a 5-minute chart here. So here we're at. We shorted right here at the top in anticipation of a breakdown of this trend line, a reversal here. And so we did good. We got in short on the highs, and as I said, I'm looking for a move down, to this area in GDX. And Nugget is my, or Dust was and still is my preferred trading proxy. However, I posted earlier today that this was a support level. We had a nice gap here in some horizontal levels, and I posted that I wasn't going to trade anything, that there could possibly be a reaction, but I didn't think the odds were elevated enough to have a substantial or significant reaction. And for those of you not familiar, by reaction, I use that term to mean any type of consolidation and or bounce, which is usually what you get off the initial tag of a decent support level when a stock has fallen from above. Or if you're long a stock is moving up, you can have a reaction when a resistance level is tested underneath. And it's usually that initial tag of those levels is where I look for reactions. So with that being said, that's what I mean by reaction. As I said, this level here, I didn't think with the fact this wedge had just broke down, very powerful divergences. I think this was a very high probability short trade on GDX, and so far it obviously has been. It's already profitable at this point, and it just at this point the velocity was so strong, the momentum, the wedge has just broken. Those who didn't see it before certainly took note of it at this point, and that's why I didn't expect much of a reaction there. However, fast forward to where we're at now, this level here, we have even better support. We look at quite a few reactions over here. Failure to get above that level, we broke above it, we tested it from above. So this is a pretty significant support level, and although I don't think this wedge breakdown has fully played out yet, based on the scope of this pattern, the negative divergences in place. If you look here, you can see this red right now. This is one of my trending indicators, the 33-13 pair on the 60-minute chart. Those are EMAs, and I've set up this custom histogram. And as you can see, it does a great job of capturing, the bulk of the trends on this time frame. Would have got you short back here, all the way up here on GDX, kept you short up to this point, and as you can see, there's the buy signal, got you long during that rising wedge. The rising wedge in itself was the heads up. I had marked that back then, negative divergence and all that to get out of there. So I don't want to spend too much time on that, just really where we're at now. So Again, I do still think we'll have a reaction. We've already had the reaction. Let me be clear on that. This is by all means. You see, we hit that level pretty much to the penny, and that is a reaction, bounce and or consolidation. Now, whether we go down, as I mentioned, my stop will be a little bit below this low here. I had a reaction low back here, and wouldn't surprise me one bit to move down a little bit, make a little bit lower low today. And it's now we're almost an hour to the close, so I don't think my target will be hit today. If it is hit at all, that, like I said, I plan to sell. I took some nugget long, and which I plan to get out of just shy of that as we approach that 16.15 area. And if GDX goes below 15.62, then that's it. I'm out. Nothing ventured, nothing gained. What I wanted to talk on again is really define your trading style, your time horizon. If you're not a nimble trader, you shouldn't really try to game these short-term bounces and reactions off certain resistance levels. It just requires a lot of focus, and you need to be pretty nimble. By all means, if you want to try it, just keep your stops tight on these. But I'll go over the charts of GDX real quick, the components. So the reasoning again, other than this support level I mentioned here, I showed you on the 5-minute chart some of the things that I was looking at. This bounce target. I think on the high end, I think that would be a great area to re-enter shorts if we get there up around the 1621 level. We have that 38.2 Fibonacci retracement, and that is from the moves off this reaction low right here. You can see I set the line on this most recent reaction low up until the highs. I'm sorry, I'm looking at this in reverse. From the top to the move down here to where we bottom today. This would be from this point here. If we move up, that would retrace 38.2% of this move down so far, and that lines up perfectly with that horizontal level. You can see there's a top of a gap right here at the open on the 14th, and that's what I'm referring to there, as well as some other reactions. Overall, these charts are still bearish, and I would not be surprised at all if this is the only reaction that we get, this minor little bounce here, and we go back down. You can see the MACD is now turning down, attempted to make a cross back above the 0 level, which would have been bullish, didn't happen, failure there. Let's look at the 15-minute chart. There is some support here. As you can see, I have this nice trend line drawn here, a couple reactions, 1, 2, 3, now 4, and really 5. We hit it and bounced. We're testing it again. This is really that same 13.3 pair that I just showed you on the 60-minute chart, or I believe it was at the 30-minute chart. I have a 14, 13. I have different ones that I use. I didn't customize these for this video, but this one works well on the 15-minute frame. It's a 28.68 pair, and you can see there is that bearish crossover, which indicates that the near-term trend, which went bullish back here and has been bullish since, is now bearish. So what I'm getting at here is I'm trying to pick up nickels in front of a steamroller, and I don't think that's the right trading strategy for everybody. Personally, I don't mind. I do it all the time. If you add up quite a few nickels, nickels 5% of a dollar. So, let's say you take 1,000 shares of a stock and you're looking to get, 5% of that. Well, that's $50 for every 1,000. So you can do the math. You get a few thousand shares, catch a few nickels, you make a few $100 for the day. A few thousand, depends on how much money you put into the trade. And that's all I'm looking at here. And as I said, then I plan to get short again. So this is one level I'm watching. Just from my experience and knowing how these stocks trade, how GDX trades, it wouldn't surprise me to see them run it through here, try to run some stops, suck in some more shorts, and then reverse it and get those bounce targets I was looking at. What I want to do is real quick, I'll just look at some of the top holdings. That is, as most of you know, when trading the miners or GDX or any derivatives like Nugget or Dust, I always look at the top holdings. So what I'm doing now is clicking on my watch list of the components of GDX, which are sorted by market cap. So we're looking at the largest market cap. That's about a $13 billion company, and that's GG, Gold Corp. I have parallel uptrend lines here. I should clarify, we're looking at the 60-minute chart. That one, at least on this 13.3, is still on a buy signal, but you can see it's turning down looking to make an impending cross, but hasn't done so yet. So that one's still in a buy signal. MACD is still up in positive territory, although it is pointing lower, as is the RSI. So again, if you ask me where these stocks are 2-3 days from now, possibly even later today, lower. But I'm looking for a little bounce. We've only slightly undercut that lower trend line. Sometimes I'll use parallel trend lines if I see that they fit well, and this is a lower too. So GG is right there on the line. Could have a little fake out move here and snap back up, and that would be bullish because that would be a bear trap if a lot of traders that are watching this jump in short and then it snaps back up there. Let's just move on quickly and look at the rest of these. There's Newmont. 60-minute chart. Newmont NEM is one of the larger miners at about showing about 10.2 billion in market cap. And you can see here, just as with GDX, we had, although GDX already broke down, these are some different patterns that I have on the 60-minute chart of these top holdings. You see the negative divergence is clear here on the, just about every indicator and oscillator I'm looking at here. You see prices making higher highs with the indicators making lower highs. But we're still at support. So what I'm doing is I'm looking for that last little reaction before this and all these other patterns I'll talk on here break down. Here's ABX. This is an ascending broadening wedge pattern on the 60-minute chart. Fully mature. We have 3 tags at the top, at least 3 different clusters on the bottom. That is what you want to see on an ascending broadening wedge. Negative divergence as well. It's not drawn on each of these. RSI, you could put a flat line here. There's a slightly down sloping line there on the MACD. And my expectation, of course, would be to, as with GDX, is to see it break down, and when GDX does hit that, if it does hit my downside target that I'm talking about, I should say if, there are no guarantees in trading, you can see that it's going to probably take us down to about the $7 level. So this video is good for those of you who like to trade individual miners as well. Especially longer term investors can use these 60-minute charts to really hone down your entries if you're building up a position in the miners now. I don't think it's objective to buy right here. We are at support, but that's a bearish pattern right there, confirmed with the negative divergence. So I think a pullback to the $7 area would be a great area to either cover a short if you were to short a breakdown of this pattern on ABX, or for those of you that don't like to short but want to go long, that would be your next buy point. I think a very good buy point on ABX is about the $70 area. Moving on, FNV, Franco-Nevada Corp. You can see this rising wedge pattern. They're not all drawn out here, as I said. I'm trying to get this video out quick. But just across the board, negative divergences. The indicators and oscillators making lower highs against prices making higher highs. Slight breakdown there. There is some support just below, and that's something else I'm looking at. A lot of these patterns look like they can go down. That's why my stop is set a little bit below today's lows. There's some nice horizontal support here around 49.88, somewhere right around there, maybe just a hair below. So we could see that little washout move, maybe a breakdown and a back test of these wedges before a continuation of the move down. That wouldn't surprise me in the least. Here's AEM. AEM, this is a sort of an extended wedge pattern. If you see here, it really defined the highs right here, these reaction highs, and then once we broke above that level, it has contained all the pullbacks on the stock. There's another uptrend line on that wedge coming in, and this just marks, this line here shows you the divergence against the MACD, the 1333 EMA pair, the MACD, and the RSI. So that shows a divergent high, and my expectation again is maybe for a little short-term bounce here, which I'm trying to game, and then get back short for a breakdown of this pattern and cover when, again, really I'm focused on GDX right now, trading that for the most part. Gold, GOLD, not the metal. This is Randgold, the company. Right there on the uptrend line, as you can see, same story, negative divergences in place, nothing really different. And maybe we'll just stop here. This is SLW, Silver Wheaton Corp. And again, you can see nice little pattern here, this sort of almost like a megaphone broadening wedge type pattern, but several reactions here, here, here. So we're at support. And if that pattern does break, if you notice here, I have a horizontal line just below that at about 1346. And look at this nice gap back here, several reactions. That line was tested from above and another gap. So there's 1, 2, and now another gap back here. So 3 gaps, and that is just one heck of a support level in my opinion. So if this little trend line here breaks, which would not surprise me, that's why I'm giving it a little bit of room on my current bounce trade to see some of these stocks just have a little flush out move, and then probably tomorrow power up, and I'm expecting probably no more than a 2-day rally if again this long counter trend bounce plays out. And quite likely, if we can get even close to those bounce targets I'm looking at tomorrow, I would be out and then looking to reposition short. And finally, if the trade doesn't work out, sometimes they don't, I'll have to make a decision. Do I want to jump back in for the rest of the ride down? If these support levels are shattered, which is certainly a possibility, and it'll depend on the charts at the time. Sometimes I'll jump back in if I think it's objective. Other times I just won't chase. I've already milked over half the move on the short side. And if I have to wait for the miners to get back to my target on GDX, down here or somewhere around here, this gap right here, let's try to put a line on it. There's a nice gap right there at about 1521. That would probably start positioning long again before we get there, depending on the charts. I can only make that determination at the time. Okay, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed.